China has become the first and the only major economy to return to growth since the coronavirus pandemic hit the world. Chinese economy has recorded a strong 3.2% growth in Q2 FY21. That is after the lockdowns were lifted and industries had reopened. This was also a steep contrast to the previous quarter's 6.8% contraction, which was China's worst performance since at least the mid-1960s. China, where the coronavirus pandemic began in December, was the first economy to shut down and the first to start opening up the economy after a halt. Experts are pointing out at how they expect to see improvement from here on as manufacturing is leading the recovery and some other industries are almost back to normal. Consumer spending is weak due to fear of possible job losses. Cinemas and some other businesses are still shut and restrictions on travel still exist. This week, however, the Chinese government eased some curbs on domestic tourism after no new locally acquired infections were reported in 9 days. Tourist sites will allow 50% of their daily visitor capacity, up from 30%, and tours from one province to another can resume. Let's look at what the macro data suggests. Factory output for Q2 rose 4.4%, rebounding from the previous quarter's 8.4% contraction after factories that make the world's smartphones, shoes, toys, and other goods reopened. Retail sales shrank by 3.9%, but it was a huge improvement over Q1's 19% contraction during the lockdowns when shopping malls were shut down. Online retail sales rose 14.3%, up from the previous quarter's 5.9%. June imports rose 3%, including a 10.6% jump in the purchases of US goods despite a tariff war, but are down 3.3% so far this year. Exports, on the other hand, grew by an unexpectedly strong 0.4%, but are still off 3% for the first half of the year. There are also concerns being raised on exporters who are likely to face another decline in demand as sales of masks and other medical supplies taper off. Add to that the worsening relations with the United States, China's biggest national export market, over disputes about trade, technology, human rights, and Hong Kong. Experts say this suggests sustained pressure on employment, which is currently the government's foremost policy priority. Private sector analysts have said that about 30% of the urban workforce, or 130 million people, may have lost their jobs at least temporarily. They also say that as many as 25 million jobs might be lost for good this year. While Chinese government had promised to spend $280 billion for meeting goals, including generating about 9 million jobs, it had refrained from offering huge stimulus packages due to the fear of adding to the high debt already. Chinese economists have said that while the worst may be behind them, but given the huge uncertainties from COVID-19 and the global economy, it is too early to say that China is out of the woods yet.